All right, let's talk insurance.
Mhm.
We've kind of hit on it with some of the other stuff we've talked about tonight, um, but let's talk about insurance.
Okay.
So there's been a lot of changes in insurance for dive centers, for instructors.
Mhm.
Um, what has happened over the years, and why is that happening?
Yeah. So a little history. I'm not a big history. I love history, but
Yeah.
um, I think in certain places it has good value, and I think in this instance it does. When I first started in this industry, and there were multiple insurance options. I think just in the U.S. alone, we had probably 5 or 6 carriers that you could select from as a dive professional who needed insurance, professional liability insurance, and facility insurance that you could kind of shop around a little bit. Um, Now we have 3 in the U.S. Canada has 1. Um, yeah, I think they're down to 1. Um, Europe, I'm not going to, insurance is probably a more critical thing here in the
Yeah.
U.S. and Canada than it is anywhere else in the world, because Europe has good options. It's just their legal system; they're set up different. They operate different. Canada's a little bit different, but they still put an emphasis on the insurance, so a lot of them will carry their professional liability insurance there. Um, but the U.S. has gone from 5 or 6 down to 3, and another indicator, a big change that happened there is insurance is complex and it's hard to really kind of understand how it all works. But an insurance broker or carrier has syndicates, and those syndicates typically come out of Lloyd's of London.
Mhm.
So a syndicate is somebody who will write a portion or all of the insurance side of it. They look at it and they go, okay, yeah, we'll do that. Our primary insurance company, when I first started working for the agency, there was one syndicate wrote 100% of the business. I think there's 4 or 5 now.
Wow.
It takes 4 or 5 syndicates to write an insurance book, as they call them, and to get it out there. And
And
what
that's
that
to
means is,
distribute risk.
yeah,
Yeah.
financial risk.
Yeah. Yeah.
Yeah.
Right.
What it means is you're going to have one who may hold 50% of that, and then the rest will share the remaining of it. So there's that. Insurance as a whole, if you look at it from a U.S. market, is really weird. I mean, the way it's been done. We're pretty lucky as dive professionals who've been in the industry for a long period of time. Yes, the rates have gone up, but no, they are not individual specific. Think about your car insurance. When you go to write your car insurance, you probably don't pay the same rate as somebody else who's a slightly higher risk, somebody
Mhm.
else who's had more accidents or incidents or things like that. They're assigned a higher rate because they're higher risk. The dive industry insurance policies don't work that way. They're starting to change a little bit, but they haven't historically worked that way. It's we're all in the same pool.
Mhm.
We're
Yeah.
all going to do the same thing.
Yeah.
Um, the other thing I try to remind people of when it comes to insurance is you think about, and this again, if you're not paying attention to what these payouts are, you wouldn't, if this wouldn't really click. But let's just say, for good round numbers, you're paying $1,000 a year for an insurance policy. You have one payout on one claim, and this is a winning claim. So this is, let's say, it's gone all the way through court, and they've won the case. It's over $1 million in defense costs. How many policy years do you have to have if you're paying $1,000 a year to pay off one one
Wow.
claim?
That's crazy.
Yeah, I mean, again, drawing an analogy. Let's say something happens to your house. What do you pay for your house per year? You pay $1,300, $1,500 for homeowners insurance, whatever. I mean, I'm just
Yeah.
putting out numbers out there. You
Yeah.
got one claim for a flood damage or something like that. It's a $20,000 claim.
Yeah.
How many years of
Right.
policies do you take? So the insurance market is a mess right now when it comes to dive professionals, and it's partially, I think, the insurance carrier's fault because they didn't initially do that. They didn't
Yeah.
initially look at each individual and say, how many courses are you teaching? How many incidents, accidents have you reported? These kind of things. Again, like marketing, it's a double-edged sword.
Right.
If you encourage people to report incidents and accidents, and there's good reason for doing that, because you want people to report an incident or accident so that the insurance carrier is aware of them,
Mm-hmm.
and they can say, hey, you know what? Maybe there's some medical costs associated with this. How about if we just make those medical costs go away? We'll pay for whatever your doctor's fees and those kind of things are. The individual is not likely to file a suit
Mm-hmm.
against you
Yeah.
because now the financial outlay that they had isn't there anymore. The
Yeah.
insurance company took care of that. Or maybe the insurance company contacted the homeowner's insurance company and said, well, you've got a rider on here that says this. What if we share the costs on this particular thing? Let's say they were helicoptered out of an area or something like that. That's a good reason for reporting these incidents and accidents, so that insurance carriers can get in there quickly and try to resolve it. The other side of that is you don't report all your incidents and accidents because you know they're going to be held against you in the following year. So you're no, if I report all these things, then my premium is going to go up the following year. So I'm not going to report these incidents and accidents. Now the insurance carrier is blindsided, and they have a duty to defend you, so they're going to have to pay defense costs, but they're going to put a reservation of rights, and then they're going to countersue you for defense costs because you failed to report the incident or accident. That's tough. It's a tough situation. And there's been huge losses. And when you look at most of these insurance carriers, they don't just do professional liability. They do dive center insurance, which is, you can have losses due to natural disaster. You get an area that gets hit by hurricanes or something like that, or an area that gets hit by wildfires or whatever. Someone comes in and robs the store. That's a huge loss. Not only for the business, but also for the insurance carrier, because now they have to come in and they've got to replace all those compressors. They have to replace all that inventory. They have to do all those other things. It's big payouts. You get a bad year here in the U.S. with hurricanes, there's a lot of insurance payouts out there. They also do mooring insurance and hull insurance on boats. Hurricanes, bad storms, take out boats. So they're paying out all that too.
So the trend has been going down with the number of options. I mean, what happens if it goes to 1 or 0?
Well, that's an interesting question. So, I mean, there's one theory there that if you don't have insurance, you have less of a target on your back. So if you have $1 million policy, attorneys know there's $1 million on the table, and they're going to try to get it. If you have nothing, then there's nothing for them to sue for. So that's a roll of the dice, in my opinion. Because if you don't have an insurance policy, your personal assets are on the line. So if you do have something, maybe if you're a young instructor, if you're in your 20s and all you have is a car and you're still living with mom and dad, or you got an apartment that you're renting or something like that, you don't have much to lose. So they're not going to come after you. If you're an older individual and you have assets, well, let's say you have cars, you have a house, you have those kind of things. There's something there for them to take. That's a roll of the dice.
And what happens if the industry goes to 0? I mean, then we would just have less people involved, right? Basically. The calculated risk. Essentially. That's
You're sort of you're probably going to weed out all your hobbyist instructors. And I don't mean that as an insult, but your airline pilots, your doctors, your people who are doing this for just for fun, or something extra to do to pass on their passion, those kind of things. They're probably going to drop out because those are the ones who have the most at risk. Your people who are dive centers and places like that, they're going to have to pay the premiums. And the good news is that they're the individuals who were offering free courses and things like that because they were just doing it as a fun thing. Now all those customers are going to come to you, so maybe you're going to have increased business. I would say just be more diligent, be more prudent, teach better courses, spend more time with your customers, get quality time with them, and raise your course fees. Get paid for what you're doing.
And that's something we haven't touched on at all, is appropriate fees.
That's probably a separate video.
It is probably a separate video. That's a big one.
Because I will tell you that there is a direct connection between the cost of the course and quality assurance. Almost 100% of the time that we investigate a quality assurance matter, the course fees are low. You're not getting paid for your time. You're going to cut your corners.
That's interesting. I was fully unaware of that. I mean, I could make that potential argument, but I don't have any data to back that up. And there's data to back that up.
Remember I said we asked for the invoice? What did you pay for the course?
Interesting.
We see that. We see published course fees on the websites. We see all those things. We look at all those things. And almost 100% of the time, you're going to find that somebody who has the lowest course fee is also going to have a quality assurance.
I've talked about that with multiple people, and a similar idea, but not to that level of being like, you're going to lose some people by increasing your prices, but the people you're going to get are the people that are committed to this. And you get to spend more quality time with those committed people. You're making better divers who are lifelong divers, as opposed to
And I don't know who's going to see this video. I have no idea, but I will tell you something that I in teaching the ITWs, it's a little saying that I took from a helmet manufacturer. I used to ride motorcycles, and Shoei, one of the helmet manufacturers, had a saying which even as a 20-something-year-old, when I bought my first road bike, it connected with me. So I mean, I was pretty dumb and stupid and thought I was bulletproof at that time. But this resonated with me, and it said, if you have $100 head, buy $100 helmet. As a consumer, if you're worried about your life, don't go in and pay $100 for a course.
Yeah.
Because you're getting ready to go into an environment you can't live.
Yeah. I like that. That's a good one. I appreciate that one. Nice. That's good. So lots changed with insurance, and premiums have gone up. The premiums have gone up. What is the source of the premiums going up? Why are we paying more? And compare that to other industries. Like where do we fall against? You and I have talked about this before a little bit of like comparing it to other industries. Where does Scuba fall in that whole thing?
We're low. We're very low. I mean, pretty much anybody could do that comparison. If you look at your auto insurance, you look at your homeowner's insurance, you look at your renter's insurance, you look at all those things, we're low comparatively. So we haven't been paying probably what we should have been given the risk of our sport. Why do these rates go up? I've sort of outlined that already. We look at natural disasters. We look at payouts from insurance companies because they have natural disasters. So they're paying for all those things. We also have claims loss. So claims loss ratios, and claims loss ratio is essentially a legal case. It's somebody has been injured severely or somebody has died, and there's either a settlement, which is a big settlement, or there are legal fees associated with it. As I said, some of these cases, from our side, we would call them winning. But that means that we successfully defended the case, and we were found that nothing was wrong with the instructor performed as they were supposed to, and the training agency's standards and materials performed as they were supposed to. That was not the fault of whatever happened. In situations where there are losses, and that is $1 million plus, that's $1 million to $1.5 million easily. In the situations where we have an actual win, the plaintiffs win in the case, there's been $12-13 million cases. Well,
yeah,
huge.
Yeah, and even if we win, the loss is there's a payout.
It's a financial loss.
There's a financial.
The insurance company never looks at it as a win. If they take anything out of pocket, it's a loss.
Yeah,
and rightfully so. I mean, that's a loss out of their revenue.
Yeah, you're paying them for a service. They gave you a service and spend a certain amount of money. Yeah. Does SDI have any specific insurance carrier they work with?
Not really. I mean, we have one that we've worked with for a long period of time, First Dive. Yeah. But because First Dive really provides insurance in just the U.S. and in Canada, we have several that we work with, and in order to provide coverage for other areas, we have Dive Assure, which does at this point mostly Europe, and they provide a travel insurance program, and we have Divers Alert Network that we're also working with, and Divers Alert Network provides insurance coverage in the U.S. but not in Canada, and they cover a lot of the Caribbean and U.S. territories, which that's a huge benefit because you have Puerto Rico and Guam, which First Dive doesn't cover, but Divers Alert Network does.
So depending on your region, you've got options.
You do, essentially. Yeah. And then we have of course, Dan Europe, which covers all of Dan Europe. So there's a couple of options over there as well. And Divers Alert Network has dive travel insurance and personal insurance that they provide as well.